Welcome back to Stock Market Weekly. I am your host, Evan Medeiros, for Friday, September 13th. Nothing scary about this week, though. It was a bullish reversal week if I've ever seen one. We're going to talk all about that. This is the show where we break down all of the market action through the lens of technical analysis. If it's your first time joining us, thank you for being here. Welcome. As a programming heads up and note, there will be no video next week. It is rare that we miss a video. I'm going to be on the road. I'm going to be traveling. So there's no way I'm going to be able to get a video out next Friday. Unfortunately, everyone is on their own, but we'll be back on normal schedule here to kick off October. So heads up, no video next Friday. Let's get into what occurred though this week. So I got to start off with gold here. Gold has been so impressive this year. We've talked about it countless times. I mean, just it's been in an uptrend. It's, consolidates, it breaks out, it consolidates, it breaks out. And here we go, breaking out again. And for those keeping score, this is just about 14-year high, on pace for about 14-year highs. Or I should say the magnitude of this year's return is the best year that we've seen in going on 14 years. And in fact, gold is beating all equity market returns now. So we're looking at somewhere north of 24% for boring old GLD. If you just parked all of your cash there at the start of the year, you'd be very happy. Market digested a bunch of headlines this week and catalysts. So we had the presidential debate, we had CPI on Wednesday, and we had the Apple event. Very uncorrelated events, but those were sort of some of the big takeaways, some of the things that markets were chewing on this week. And, I guess the results speak for themselves. We had a big snapback rally here. Of course, we were also beaten up and oversold, right? So it's very easy sometimes to snap back when you were selling off in a sort of a fierce, aggressive manner. We're going to talk about those charts in just a little bit and the significance I think this reversal does play. This was the best week for the Nasdaq 100 year to date. And funny enough, last week was the worst week year to date of performance for the Nasdaq 100. Same goes for the S&P 500. Same goes for lots of things. Big down followed by big up. Next week, of course, we've got the FOMC, and markets are pretty split right now. So if we look at CME futures, just kind of the betting markets odds placed on next week's announcement, it is pretty split. I'm actually very surprised to see that it's nearly a coin toss on whether or not the Fed is going to cut 25 bips or 50 bips. I have no great insights to add to any of the conversation. That's just not my wheelhouse, but I am surprised that there is such a strong leaning for a 50 bips cut next week. It does worry me a little bit on the market being disappointed if it doesn't happen, but we will have to see. So let's get into it right now. Stick around. All right, we are back. We've got some charts in front of us. Warden TC2000, it's a charting platform we use throughout these videos. It's a platform we support and build cool things for here at The Trade Risk. So check out our website, thetraderisk.com. You can see all the cool scans, indicators that we have available, pre-built layouts for download for TC2000. If you're not a user, you can also use our referral link in the description of this video, get you a little coupon if you start up service to TC2000. Now let's get into the numbers here. Take a look at the 1 week returns here. These are some impressive, and these are some very big numbers. These are large cap market indices here, and we're looking at 4%, 5%, and 6% returns. I guess, okay, I'm cheating a little bit. I'm skewing the results. 2.5% for the Dow Jones. So there it is, slightly smaller number, but still impressive nonetheless. 1 month returns, everything back in the green. I think it might have stayed in the green even last week. 1 year returns also continues to be very impressive. Take a look at volatility here. You can see unwinding 4 and 5 points coming out of the VIX, the Nasdaq fall, and suddenly now going into this weekend, we are not north of 20 in the VIX. We are at 16.56, a little more kind of tapered and, balanced per se going into this weekend. Take a look at the sector returns here. Technology was the standout, up 8%. Now, technology, no surprise here, something we were talking about for multiple weeks in a row, was and had been the underperformer. Now, I guess depending on how far you take those relative strength charts and you look at those comparisons, that might still be the case, but Nasdaq not the Nasdaq 100, although pretty much the same. XLK came back fierce this week. Dip buyers stepped in. We saw some big reversals. We're going to look at a lot of those charts, but 8% for technology. Consumer discretionary up 5.5%. And then there's a big gap here until you get to the third spot, which is industrial, still up an impressive 3.72%. Energy was the weak spot this week. Is the only thing in the red here, down 0.5%. Financials up 0.5%, and staples up 1.13%. Now, if we take a look here at our sector trends, we're pretty mixed, right? We've got a good kind of dispersion going on here. Now, a couple of things to note. First off, technology, getting a buy signal printed here on Friday. The strength on the continuation of this rally throughout the week. Finally got our smart trend filters, measures price volume, price action relationships across time. On the daily time frame, getting back into the green mode there. You know, financials, some of these things that were in the yellow state, which basically just says, hey, you know, kind of hang in there, drill down, you know, look at some of the cross currents that might be happening. It's still printing yellow dots, but it didn't roll over. It didn't get a sell signal here, even though price, you know, temporarily retraced. So financials, we're kind of still waiting there. Industrials, same thing here, starting to pick up, but we're still waiting for those fresh buy signals. And you can see right down the list here, we've got kind of much of the same there. The only thing that's really, you know, sort of struggling here on a downtrend right now is energy. It's in its own kind of, I guess we'll call it a bear market, but not perhaps in the most strict, you know, definition. But with oil, with energy, and some of this just concentration in the market, we're still seeing a lot of pressure there. Now, if we go over to our market breadth dashboard here and we take a look at our 52-week highs and 52-week lows, I mean, this was one of the brighter spots we talked about last week. Friday was a bit of a concern where we had that flare up last Friday on the number of stocks making 52-week lows. And that was something we had to come into this week sort of eyes wide open monitoring to see if this pullback was really going to get nasty for us. But what we basically saw was that ratio start to invert, or essentially, you know, kind of flip back into the bull's favor. We continued to get, you know, a decent amount of stocks hitting 52-week highs throughout the week. The number of 52-week lows faded. And then going into this weekend, we get the exact opposite reaction. We get a good size flurry of stocks hitting 52-week highs, and those hitting 52-week lows really sort of dried up. So it was an impressive week for breadth. It kind of held, you know, the bull case intact. If we take a look here on our dials on the right-hand side, you can see we're printing kind of bright green here, which is basically just showing S&P, Nasdaq, and Russell 2000, the number of stocks, the quantity of stocks advancing this week or closing in the green. So long story short, breadth continues to be supportive here in the broad-based markets. Again, it might not be the mega cap. It was this week. Might not be the mega cap stocks that continue to lead us here if this uptrend continues. Now, let's take a quick pit stop here for Investors Business Daily. They are a sponsor of the show, longtime sponsor of the show. So thank you to them. This is their IBD 50 list. This is the top 10 on the IBD 50 list right now. You can see had some very impressive returns here on their top name particular, Oscar Health, OSCR, up 27% this week. HROW, I'm actually not familiar with this name. I'm going to have to look into this after the recording here, up 19%. So some nice big winners there. That's part of their IBD digital subscription. We've got a link in this description of the video. You can get access yourself to IBD digital and take a look and stay up to date with their IBD 50 list every single day. Now, let's take a look here on the macro front. We can see the dollar index was pretty flat this week, not really doing a whole lot. If we look here at our dollar chart on the right-hand side, you can see we're still basically got this positioning here of lower highs and lower lows. So we got a downtrend in the dollar. It's still intact. It's kind of consolidating right now, but that still, you know, pretty much is the same. And for the 10-year yield, we saw basically new lows get made this week. So again, we've got lower lows, lower highs. being made in the 10-year Treasury yield. That continues to be supportive, I think, for lots of different areas of the market, mortgage rates and growth stocks, and anyone that needs to refinance variable debt or coming to term debt is certainly benefiting from these lower rates. So that's what's going on there on the big, kind of high level side of things. Bitcoin really saw a big snapback this week, up 12%. I mean, it's gotten hammered over the past month, so nice to see a recovery there. We'll talk about that in a little bit. Silver also very notable this week, up 10%. That's a big move. Copper, gold, oil managing to finally turn around this week. So let's get into some charts. That's the data. Let's start it off here with the S&P 500. Let's take a look at where we were. And there's a few important things I want to talk about here. So for the S&P 500, this is the weekly chart. All right. So let's try and let's see. This might be the cleanest board we have. This 2-bar weekly action here, which we're going to see kind of sprinkled across lots of different charts this week, I think is very notable. When you have these large range, sort of weeks to take notice like we had last week. We had sort of a breakdown week. We had that thrust lower, right? We would go down to a daily chart. We talked about the fact that we resolved we resolved this consolidation down last Monday or last Tuesday after the Labor Day holiday. Had a very weak sideways consolidation and then broke down again, right? We talked about these back-to-back sort of days to take notice. They weren't back-to-back, but they started the week and ended the week. And that was notable, right? And it put us on kind of, retracement watch. We talked about the levels. How far are we going to retrace down? We looked at, I think, the SPY in here, and we said, you know what? This area that we're finally coming down to right in here is a great spot for dip buyers to start to show back up. That's about a 50% retracement. It's approximately this pivot low here, and this would be an amazing spot to see buyers step up. And, we did get it. It wasn't a prediction. It was just, hey, look, if we're trying to be glass half full optimistic on this market, this is where in a bullish scenario, we would want to see dip buyers show up. So we did get dip buyers to show up this week, and it took some time, right? So when we started this week off, Monday was our first slight clue. Didn't really give any hope, really. It was just, okay, the selling pressure did not intensify. We didn't come, after the hangover of the weekend and just come back selling more stock, and the market continues to be under pressure and the VIX goes to 25 or 30, right? That scenario got taken out. Monday, we gapped up and we put in a classic sort of inside day in the context of a short-term downtrend, right? Tuesday came along and we had a little more of a range in volatility, but we did close over this inside day, which gives you slightly more encouragement, but it still wasn't that fantastic of a session. But it's still, again, bulls kind of inching into, kind of taking over the short-term tug of war. I think Wednesday, though, was the day to take notice. Wednesday was that pivot day, and this was a very large range bar that, scared some folks out, right? We got pretty low down here, almost to the low of last week on Friday's range, and we reversed and we closed strong, kind of taking out all of this cluster of highs. And I think that was the day where you had to try and, take your foot off the either the short side or perhaps put on some exposure, or at least pay attention to the fact that dip buyers were really kind of coming in with some slightly more driving force. And of course, and then, we got Thursday follow through and then Friday some more follow through. So when we look at this action here, if we go back to the SPY, another thing that I think is worth talking about is again, Wednesday's session on the volume. Again, I'm looking at dollar volume, but just take a look at what transpired here. I mean, it was the heaviest day now that we've seen, going all the way back to that fierce kind of sell-off right at the start of August. And so, that was a bit of a turnaround session that really kind of changed the character, I think, of this market, or changed the tune of the short-term price action on Wednesday. And then, of course, that follow through, just basically, carried through for the rest of the week. So now that we go into the weekend, it's the exact opposite of last week, right? We've got 5 days up in a row, and just like we said last Friday, where look, it's a little bit tough to panic, kind of coming in on that sell session on Friday. It's kind of the exact opposite here. It's a little bit tougher of a chase, right? We're coming right back into resistance now. We're up 5 days in a row. We're basically back to all-time highs. Let's let the market digest a little bit here, perhaps, right? Like, let's see how it's going to handle this level. It is in chase mode. Markets love to make people chase and keep the majority of people off sides. But, it's just now V-shaped recovery coming back into some prior supply. And this is where I'd want to start to measure the move a little bit closer. I'd be reluctant to add an aggressive amount of exposure here. If you were flat all week and now you're starting to add today, feels a little bit late, but it depends on time frame. Overall, this weekly picture, right, zooming back out, I always like to respect what I call these 2-bar reversal patterns. And the reason I respect them is because they carry a significant amount of sentiment and sort of offsides type action, particularly when you get them occurring with large ranges, right? Large range last week, that was the biggest down week for the S&P 500. Everybody was talking about it, us included. And so that carries a certain significance into people's behavior and how they're, taking risk off the table and perhaps moving to the sidelines, perhaps they're shorting, right? And when you get this entire flip the next week where you have now the largest up week, that causes lots of folks to have to make quick decisions and to really pivot on exposure and to change their mind quickly. Otherwise, they get sort of run over. So now you're getting a positive reversal in the context of the long-term trend that is higher. So I think longer term, this is a very, kind of bullish developing week here. But I think it just, again, in the short term, I wouldn't be surprised to see us again chop out to the Fed on Wednesday, right? Something like that. So that is the read there on the S&P 500. Very impressive stand by the buyers, dip buyers stepping back in, making themselves known. And congrats to those that were brave enough to buy the dip. It shouldn't really be about bravery. Hopefully you just followed your plan and took signals as you needed to. Now, for the QQQ, it was, again, the best week of the year for the Nasdaq 100. We entirely negated and took out last week's losses. We are now back to levels last seen at the end of August, right? So again, most impressive week of the year, heavy volume, but we're still kind of coming back into this range here. Once again, if we look at the Nasdaq 100, which had been trailing on a relative basis, we're still kind of stuck in this, middle of this range. We're just now at the top half of it now. So we're going to need to see, again, just more kind of continuation of support, and we're going to need to see price able to sort of chew through some of this prior supply in the mid 470s, and we're going to need to see price hang in there as we, if we're going to get more excited for potentially a trip to retest these highs. That's just not necessarily in the cards right now, but it was certainly encouraging action to see that the bleeding stopped here from this really tough sell-off. Russell 2000, again, in a very sort of different formation, but it's back over our 210 line in the sand. It is charging higher, particularly on Friday with that gap and go session up 2.5%. Let's take a look at the weekly chart here. Again, you can see a big range here over the past year, basically, and really going back multiple years that kind of culminates in this 210 area. We're back above it, 4 weeks up in a row, one heavy week of selling down, and now we're moving back up to the upside. So again, I think you got to like the Russell 2000 here, over 210, got to give the benefit of the doubt to the buyers. Still could be a little sloppy. It doesn't look like the cleanest pattern here, but you just got to respect the breakout, I think, action there that occurred this week. So that's really the roundup there on the major markets. It was it was a turnaround week for sure, right? Dip buyers again showed up. They did it with volume, took out last week's highs, and you had to be quick to adapt and to adjust to what we saw this week. Wednesday, I think, was the key day. So let's take a look here at a couple other markets. I want to spend a little bit of time on GLD. GLD here, new all-time highs, good volume coming in. Again, this compression, this sideways range here, just again, a hallmark kind of consolidation just underneath highs. Uptrend has been intact. It's been acting very strongly here technically throughout the year. It made most of its gains in the first, 3 months of the year. So it moved 15, 18, 20% to start the year. And then it went sideways for quite some time, but it never broke down. It just kind of consolidated sideways, and then it started to ratchet up with these slightly higher lows preceding this breakout. Take a look at the yearly chart here of GLD. Again, it's up 24.85%. That would be better than the Nasdaq, better than the S&P 500, Russell, and everything else. If we take a look at the yearly chart, again, this is such a long-term view. Not many people would actually trade on this, but you just have, again, this nice pattern here where back in 2011, gold topped out. This is the GLD, which is not a perfect gold instrument, but it's the best we have for stockland. 183, it topped out, and then it went into a multi-year kind of pullback, downtrend, consolidation period. We worked ourselves back up here in 2020, and then we went sideways for, again, feels like forever, 3 years. And here we go, breaking back out. Very sort of textbook, healthy looking, technical price action, but you're looking at a yearly bar. So not many people are going to really look that long. Monthly chart, I mean, you can go right down the line here. You still see the technical kind of perfection here on this breakout. It's long in the tooth. It's above Bollinger Bands. It's a really tough chase, right? So if you're just starting to think about gold now, you're a little bit late to the party. But, keep it on the radar. It is certainly something that folks are adding into their portfolio. We do have a position here in GLD. We've had it since the beginning of the year. So that's gold. Let's take a look here at silver, SLV. Again, this is more actionable, right? It hasn't broken out. This is a weekly time frame. Let's take a look at a monthly time frame. I mean, this, again, looking at long-term patterns, if this is your cup of tea, if this is something you have the patience for, the allocation stomach for, silver here on a monthly basis looks technically beautiful. It hasn't broken out yet. It's still early. It's put in some heavy volume here at the start of the year. It's consolidated for 4 months, and now it looks primed to go. This looks great. I don't have a position here in SLV, but technically, I could certainly see making the case here to get involved. So SLV also looking good, and that takes us over to Bitcoin. So if we take a look here at Bitcoin, this is very different. Now there's some similarities, of course, from Bitcoin to gold, namely, of course, kind of store of value, fixed supply, but just from a technical perspective, if we look at the start of the year, most of Bitcoin's gains came in that first quarter of the year, end of last year into the first quarter of this year, and it's been going sideways here. So unlike gold, it hasn't broken out now of its longer year-to-date sort of consolidation, but it saved itself from the lows. It prevented a bigger pullback, I would say, with this week's action. It's now just simply back into the range. It's back to a 60K magnet here. We still have kind of this flag, this channel, this kind of messy consolidation that's still occurring here. I think, again, if you go to a monthly chart, you're going to start to like the way things look better. Just like gold and silver, take a look at BTC on a yearly chart, or this is a monthly chart. Yeah, TC2000 just doesn't have a lot of data on this. We should be able to see more data, but you get the picture here. I mean, this looks like a pretty textbook looking flag on a monthly time frame, right? So it hasn't triggered. We don't know if it will trigger, but it's something to keep our eye on. IBIT on the right-hand side, basically the same thing. You're just going to get even less history on it. So Bitcoin, still like it. Our trend position for this is not engaged yet. If you do need a trading system for Bitcoin, if you want to, participate but risk manage it, check out our Galahad trading system. It's having a great year. Does not trade often, trades Bitcoin, and we'll see if we get allocated into a trend position there in the coming weeks. So that is, I think, I want to talk about oil as well. Let's talk, see if we can move charts here. Oil. Yeah, so oil has been, no surprise here. We talked about it. It's been in a very, very tough spot. We finally got kind of a snapback this week. It was a little bit lackluster, but it still managed to close green this week. We still didn't see a tremendous amount of volume, a real convincing low that I would say got put in here. It's still TBD. It's still in a short to medium term downtrend. This is a weekly chart. It's kind of messy here, just all around. Monthly chart still looks like you're just in consolidation land. So for USO, I think it just is still kind of struggling here. I think if buyers can get this back over, call it 7150 for the USO ETF, I think you've got maybe some signs of life, maybe a bottoming formation that finally drew itself out here over the last few weeks, but we got to really get a little bit higher here. Over 7150 would start to make me think that. USO just generally here, I don't have any good conviction behind it or any exposure. So that's the way I'm looking at it, but still certainly notable, oversold and in a tough spot. Now, I wanted to finish off the video just looking at some large cap stocks. So large cap stocks that moved either aggressively up or down on the week. It's a simple layout screen that we have here, and there's nothing on the downside. So everything that's triggered here was on the upside, on the bullish side. So let's just take a look at some of these stocks. So first is Broadcom. Look at this weekly bar, 22% to the upside here. Heavy volume, heaviest volume that it's seen in a handful of months, or a couple months, and uptrend continues here, right? So talk about, large cap stock performing, talk about a semiconductor that just, really kind of came back from the dead there very quickly. That was impressive. Palantir, we talked about this one last week. This is one that I had a position on, talked about it, how it was one of my favorite relative strength candidates. Now, of course, we got the great news over the weekend that it was being added to the S&P 500. So that was wonderful for me. I still have a position here. I did take some profits on Friday going into the weekend. So I took some chips off the table, but I still have Palantir again showing up on our screen here. Weekly chart certainly extended now at this point, but acting well. I'm going to go a little quicker here. Nvidia on this list as well, up 16%. Of course, everybody's eyes are on this, but a very nice recovery there. Talk about another 2-bar reversal, right? Large range down, large range up. I would take notice of those types of stocks. Arista Networks, Oracle, huge move this week as well, 15% skyrocketing here to new highs. GEV, I don't know what this is, but it looks like utilities, so I'll have to take a look at that, but there you go. AMD also putting in a nice 13.37 and taking out last week's highs by a decent margin. CEG, Marvel, Dell, have a position here in Dell. GE, new highs there. BX, and CARR, all notable large cap stocks that are up. Not advocating buying any of those, just notable price action, either taking out last week's highs, doing it on heavy volume, expansion in range, sort of that type of criteria. So that is it for me. That is the roundup for this week. Lots of, changing of gears here, I think, were required by the short to medium term traders. Hopefully you managed it okay. Don't know if we're out of the woods and it's just the coast is clear to continue up. We still have an election, right? We still have Fed policy. We still have economic data. There are still worries or things that are overhanging this market. As the election draws closer, we will certainly have that kind of uncertainty, unless we start to get a more clear-cut winner being priced in by the market. It still seems like a pretty close race at this point, and I think that just naturally is going to gridlock capital a little bit until after the event. So that is it for me. By the way, again, as a reminder, I will not be around next Friday, so no video next Friday. Trade them well this week. Thanks for tuning in and watching. Links in the description of this video. Hopefully it was helpful for you. Have a great weekend, and we'll see you back here in 2 weeks.